Hi everyone and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. Tonight we're going to take a unique look at Cathie Wood from Ark Invest, what her perspective is on short sellers. We'll talk about what that has meant for Tesla and its stock owners and what it might keep meaning. But we'll also highlight what that could mean for plant-based companies such as Beyond Meat, the Tattooed Chef, and the Very Good Food Company. Before we look at what Cathie Wood has to say about short sellers, I would really appreciate an early thumbs up, since it will help spread this message to other people. And if you're new to the channel, don't forget to subscribe. Thank you. I appreciate you.
The GameStop and the let's get the hedge funds. One of the interesting things about this is they're actually aiding and abetting, and I don't think you've heard this anywhere else. They're aiding and abetting the bond bubble. What is happening? What is happening? These companies that are left for dead by innovation, by the way, are selling, some of their bonds are selling at 25 cents on the dollar. They're dead as doornails in many, even bond investors' eyes. Once you drop below 75 on a bond, 75 cents to the dollar, the risk of bankruptcy looms large. So now some of these companies are refinancing. They're actually accessing the equity markets. They're not refinancing their debt. They're right now, they will. They're accessing the equity markets, and their bond prices are skyrocketing. They're tripling. I think it was AMC. Their bond price has just gone from 25 cents to 75 cents. Now, if you ask me, a student of innovation, maybe there's a shot of survival here, and maybe more so now that they've been able to do an equity offering, which they could not have done 2 weeks ago. Maybe, but I would not be putting my money there. I want to be on the right side of change. That's what ARK is all about. Do I like a two-sided market? I disagree. I agree with Elon Musk on almost everything, certainly in terms of technology. But on this point that short sellers are a negative for the market, and ARK, who were terrorized during Tesla's plunge during 2019, if you have the courage of your conviction, and our courage comes from research, back then, what did we do during that plunge when many speculators were saying they're going to run out of money? Our simple question was, how can that be? The markets have not shut down. And sure enough, they did an offering. Was it at a lower price than many of us would have liked? Sure, but it was small compared to the ones they've done recently. We bought all the way down. It was a gift for us to have those short raids.
This is an interesting perspective in my eyes. Normally, a lot of people would argue that short sellers tend to raise havoc for us long-term investors. They add to the volatility of the stock that we are invested in. They start selling when the stock has finally started to rise again. And when these short sellers start selling them, lots of other people start getting scared and follow the herd mentality and also start selling off. We've seen it so often with several plant stocks like Beyond Meat, Tattooed Chef, the Very Good Food Company, and Else Nutrition, to name a few. These are stocks that are disrupting the industry. They are hot at the moment, and short sellers use this to their advantage. When they start selling off, especially hedge funds or people who are heavily invested, and others follow the lead, then these hedge funds or short selling individuals wait for the so-called perfect opportunity to go in strong again and repeat the whole process, so-called rinse and repeat. If you have the stomach for it, it is an effective strategy, but a highly risky one, since we know that no one can predict the market.
Everything you're doing is based on research. And I think with these meme stocks, people are saying, well, what's the research? Like, what are they doing this on, right? These companies, you want to be on, as you said, the right side of innovation. So has this exposed, I mean, some people think it's exposed a systemic risk to free markets, and others think it's the very definition of free markets.
Yes, well,
where does it fall?
Oh, yeah, no. Truth will win out here. And the truth is, history is not going to be on the side of those companies that didn't invest enough, to move into the new world quickly enough, and probably are not going to be a big force moving forward. So one of the things that I did find interesting, I didn't know that a stock could be, or that 140% of the float of a stock could be short. That was a surprise to me. And so I think that hedge funds, or whomever is shorting, it's not just hedge funds, there are all kinds of investors shorting out there. It's going to be interesting to see if they will stay or if they will move to such what I believe was an outrageous position relative to the float out there. So kind of, in a way, they might have seen this coming. And I do know that the one firm that got in trouble was I guess the Reddit folks were focused on the listed puts of the, now what's unfortunate about that is they probably don't know much about OTC puts, over the counter puts. Those are opaque, they can't see them. All this move will do is push all of that market over the counter, which is extremely profitable for banks, but it's more expensive for the end investors. So it's a little unfortunate. As an investor, I always like to hear the other side of the argument. And that's the other unfortunate thing that's going on here, I think. There are people who are now afraid to talk about why they're bearish on certain stocks. If during our Tesla 2019 experience, if we didn't have the cacophony of investors, sell side, buy side, retail, institutionals, putting down Tesla, we wouldn't have gotten the opportunities to buy it that we did. And we wouldn't have understood how much those investors did not understand what was going to move the stock. That helped us. And if their voices are shut down, I think that will be doing a disservice to all investors, because I want to know, what are the arguments against this position? Clearly, we're missing something, but we weren't when it came to Tesla.
And here is where it really gets interesting. Like Cathie Wood states, it's a gift, and it was a gift for Ark Invest that so many analysts, Wall Street and others, were putting down Tesla, because that meant that they could keep investing more into Tesla at lower prices. If everyone thought that they were amazing and see their future potential, the stock price would be a whole different story, right? And today, with Tesla, it is somewhat different. She was talking about 2019 and 2020, and although there is still plenty of people and analysts that keep arguing that Tesla is a bubble, totally overvalued, which it is, but that doesn't mean that they won't catch up and even way surpass that current valuation. Yet, the story is somewhat more balanced now. Wall Street does seem to have caught up, not all analysts, but more than a year ago. But we do see this old story repeat itself, especially in plant-based stocks, and even more profoundly in Beyond Meat, considering that they are the industry leader. People who held fast in Tesla, who weren't swayed away by constant negative perspective of Tesla's valuation and the so-called competition that would soon put Tesla in its rightful place, these people who stood their ground have now been nicely rewarded, me included. Now, in my opinion, and the opinion of Cathie Wood, and Ark Invest, and Shamat Palihapitiya, among several others, still believe and feel strongly that Tesla still have much more growth in them. But could there be any other similar situation out there, with a company that needs to struggle through the onslaught of negativity from Wall Street and other so-called experts? Is there another story of David and Goliath, a company that tries to disrupt an age-old industry that is destroying the planet? Beyond Meat being the obvious candidate. We keep getting different analysts' opinion on Beyond Meat, where they tend to put down the company in different ways. One of the most common themes, except the revenue, is that the future competition will cripple the company with time. One of the arguments is often that there are now other players in the same industry sector that could stand to compete with them in time. Impossible Foods is seen as one of the largest threats, especially when they finally decide to IPO. But another, maybe larger concern is when the traditional meat industry actually starts to wake up and put their efforts into making plant-based meat alternatives. The idea here is that these companies, like for instance Tyson Foods, these giants in the animal agriculture sector, when they use their capital and influence, well, then that's that. They have already started to make moves into the plant-based food sector. Yet I see the same story replay itself in front of my eyes. The story that we just previously saw between Tesla and the ice makers, the traditional car companies. The old stories were when these old giants, Volkswagen, Ford, GM, BMW, when they start getting into making electric cars with their capital, with their old and proven brands, well, then it will be game over for Tesla. And where are we at today? A few years ago, Tesla only had a valuation of a few $1 billion. Today, they're reaching $1 trillion and is valued as the largest car company on the planet from a valuation perspective. And interestingly enough, they really aren't a car company. That is actually the small part of it. But that is a whole different story for another time. Today, these traditional car manufacturers just can't catch up with Tesla's battery technology and overall software technology. They are years behind. The reason being that they are too late to the game when they started taking this serious. Yes, they are developing their own battery technology at the moment, but that's the thing that has been Tesla's focus since the very beginning, and now they have the resources to keep the lead. Eventually, several traditional car manufacturers will probably use Tesla's technology, and this will benefit Tesla shareholders as well. And here we have the connection with the plant-based sector. Beyond Meat has been focusing on plant-based meat alternatives since the very start, for over a decade now, and that technology has been their whole focus. They are years ahead of the competition, especially the animal agriculture industry, their so-called greatest threat. When the Tysons of the world wake up and starts to realize that they need to put a much larger focus on the plant-based food sector, they might be too late to the party. And that is the interesting thing here, right? Because just like the traditional car makers of the world, when they eventually realize that they need to focus more on the EV space, they're not only too late, but they're entangled in their own industry. They still keep producing mostly ICE vehicles, and how do they stop? When they have millions of cars out there that needs their attention, updates, service, etc. Their whole brand is ICE vehicles. Not only that, they put a lot of time and capital to come out with these new ICE cars, so they just can't back out. I imagine the same is true of animal agriculture companies, if not even worse. Their whole identity is traditional meat, right? It's a whole chain of events that need to constantly be fulfilled and managed. About 70 billion land animals are raised and butchered every year so we can have our meat. That is not an easy change. It is not easy to change your whole concept and divert capital from a machine that has been rolling like this for hundreds of years. That is changing tradition and culture in a massive way that far exceeds the transportation sector. It will most definitely not happen overnight, and when they start implementing it more and more, companies like Beyond Meat, Impossible Foods, the Very Good Food Company, the Tattooed Chef would have had that much more time to perfect their whole focus, which is plant-based food. They are the specialists in the world in their industry sector. Beyond has had to battle its fair share of short sellers, and they still do. At the moment, they are very volatile. When they get great news, they fly up 20 to 40%, and then the short seller starts to take their profits and play their games. We have seen the same pattern with Tattooed Chef, which is also a great company with incredible potential. They've had this issue since day one. When they were a SPAC, FMCI, they flew up from $10 to almost $30 in a few months, and then crashed down again to only repeat this process over and over again. This continued when it finally merged and became the Tattooed Chef company. It has incredible fundamentals, yet it still travels up and down between $20 to $25. It seems to have a hard time to move on beyond that $24 line. And then we have the Very Good Food Company, aka the Very Good Butchers. This is also an amazing business that showed great promise. In just a few months, if not weeks, it jumped from $1 company to reaching an all-time high of $9.50 in the Canadian SEK. Then the shorts took advantage of the momentum and started their journey, and it has been a battle between the shorts and the long-term investors, and the stock seems to jump between $6 to $8 at the moment. Obviously, it's not only short sellers or intentional short sellers. There are probably lots of people who don't understand the valuation when looking from a value investing perspective. It makes sense for them to get the heck out of Dodge, right? But these are disruptive companies, growth companies. They don't follow the same metrics. It's a whole different ballgame out there today. I still keep hearing a lot of worried voices regarding these plant-based stocks and companies, panicking, nervous about their investments, and others complain about the volatility. But I would say to you, learn from Tesla's recent history. Listen to what Cathie Wood talks about. This could be considered a gift. If you have the courage to remain long, and that courage comes from research, doing your due diligence, but also understanding the industry and where it is headed, can you see their vision? Do they have a great product? Do people love their product? Do they have an advantage? And do they have a strong CEO and management team? If you can see these things, you now have the perfect opportunity to invest more into these companies because there might come a time sooner or later when these stocks really fly to the moon, in my humble opinion. And when that happens, many of you might be greatly rewarded if you hold your ground. Folks, if you're new to the channel and you want to learn more about these different plant-based companies that show great potential, I'll leave links to my videos down below in the description and at the end of the video. And don't forget to subscribe. And if you found some value in today's video, please feel free to smash that like button. And as always, this is not financial advice. These are just my own thoughts and opinions and some philosophies. It's always important to do your own due diligence and invest safe. Thank you for today, guys. Peace out.